Hey home buyers, this one is for you today. If you're looking to buy your first home, or you're just looking to buy a home, you don't always have to be a first-time home buyer for this stuff. You may also be looking for some help, some financial help. And the most common kind of financial help comes in the form of down payment assistance. But down payment assistance comes in many forms, and it can get a little confusing sometimes. I'm Mike for Super Loans, NMLS 237341, and this is your guide, your overview, your intro to the different types of down payment assistance or DPA programs. The first type is the standard DPA loan. This is the most common type of down payment assistance, and it's where you get a regular mortgage to buy your home, typically a conventional or FHA loan. Then you get a second DPA loan to cover your down payment and sometimes your closing costs too. This second mortgage has an interest rate and monthly payments just like your first mortgage. Now, that interest rate could be zero, but there will be an interest rate attached to this loan. You'll make that second, much smaller mortgage payment in addition to the typical payment on your first mortgage, but in return, you get to buy your home with little to no money out of pocket. Well, you have to make that second mortgage payment most of the time. This brings us to a couple subsets of these DPA loans. They're still second mortgages. They just have additional features that make them function a bit differently and in your favor. One of these features is deferred payments. This is when you have a DPA loan that doesn't have monthly payments at all. The amount you borrow for down payment and closing costs will stay with you and will need to be paid off, but that payoff doesn't happen until sometime in the future. For example, when you refinance into a lower rate or sell the house. The second feature is forgiveness. A DPA loan that's forgivable comes along with a stipulation that says if you do what the program requires of you, your loan is forgiven and you don't have to pay it back at all. That requirement is typically that you make on-time payments for a specified number of months or live in the home for a certain period of time. After that time frame is up, the loan's forgiven. At Super Loans, NMLS 237341, we have access to many different down payment assistance programs, the most popular of which is a combination of all of these DPA features. You can get a standard conventional or FHA mortgage and get a DPA loan to cover your down payment and maybe even your closing costs. Then, the DPA loan has deferred payments, so it doesn't raise your monthly housing payment at all, and it's forgivable. So if you make your payments on time for the specified time frame, it's forgiven and you'd never have to pay it back. If you want to apply, get pre-approved, and receive a personalized quote, head over to superloans.com and click on Buy a Home. It's a big blue button right there on the left side. Our application takes a couple minutes and one of our mortgage experts will connect with you in no time. DPA loans aren't the only way though. You may also qualify for a down payment assistance grant. These are typically offered by a state or local government entity. If you can find a local grant, they're great. They give cash to you at the closing table to be used for down payment, closing costs, interest rate reductions, or any other costs related to the transaction. There's no second loan, so there's nothing to pay back. Grants are typically designed to help middle income earners or lower, and they're basically a gift. I mean, they really are the best kind of down payment assistance. Another type of assistance is called the Mortgage Credit Certificate, or MCC program. These are less common and they'd be made available through the county that you're buying a home in. But if you qualify, it can help lower your property taxes. Now, I know this doesn't help with down payment or closing costs or anything like that, but it will reduce your monthly housing payments. So don't turn a blind eye to these programs if they're available in your area. You can also save with tax deductions. These don't help you buy the house. They kick in once you become a homeowner. But when a homeowner files their taxes, they may be able to deduct the amount of mortgage interest and mortgage insurance they pay over the course of the year. As always, a mortgage person, not a tax person, consult your tax advisor for details about things related to tax filings. place. Another form of help could come from closing cost assistance. Every so often, you may find a government-sponsored program that helps you pay closing costs. They're rare, as most of these assistance programs focus on down payment, but it's not uncommon for the seller to contribute to the transaction, especially if the house has been on the market for a while. This seller concession or seller contribution is an amount of money the seller of the home would give to you through closing that helps you pay for closing costs. Talk to your real estate agent prior to submitting your offer to see if a seller concession could be in the cards. Also, you may be able to get a lender credit from your mortgage lender to help pay for closing costs. Ask. The worst they can say is no. There's a lot of talk in headlines about federal homebuyer assistance right now, but currently, this typically comes in the form of government-backed loan programs from Fannie Mae, Freddie Mac, FHA, VA, and USDA. I'm not going to get into the nitty-gritty here because pretty much all lenders offer these. And when you get pre-approved, your mortgage expert will review all loan options with you to make sure you're choosing the best one for your situation. The vast majority of government assistance for homebuyers comes at the state and local level, not federal. You can find state-specific information on the U.S. Department of Housing and Urban Development website. I put a link down in the description for you. And most states will also have state housing agency websites full of resources if you want to explore that route. Any way you look at it, there's not a whole lot stopping you from buying your first home. Even if you don't have the money for down payment and closing costs, there are ways. We have tools. You got this. And if you do have the money, use these programs anyway. You're about to be a homeowner. There's no need to part with a few $1,000s if you don't have to. Again, I'm Mike for Super Loans, NMLS 237341. We appreciate you being here. And if you got something out of this video, please consider subscribing to our channel down below. We'll talk to you next time.